So we got two different analysis today. We got Euro Pound and gold. Now, any new entry has to be low risk. Even if a currency pair has low correlation and is far away from any US, China, or deal, it still causes investor worry. And when investors are worried, there's low liquidity in the market. When there's low liquidity in the market, well, it affects everything. So any new entry on any pair, we're keeping it low risk. Okay, so our first analysis today is on Euro Pound. Now, we're going to start on the monthly as usual. And what do we do when we're on the monthly? That's right, we look for area sensitivity. So, zones and trend lines. We identify our upper zone by seeing sell pressure. We identified our lower zone by seeing horizontal buy pressure. Here we see lower high, so we identify our downtrend. So off our monthly upper zone, we see a strong push to the downside. Sellers had control over the long term. Eventually, price made its way to its lower monthly zone, where then it saw buy sensitivity or buy pressure as expected. All right, so now let's talk about this monthly cycle. Here we see a move to the downside. Here we see a push, breaking this downtrend to the upside. This is a significant move. Okay, this is a strong area of sell pressure. Buyers took 100% control and pushed price to the upside. Now, price saw sell sensitivity at its upper monthly zone as expected. Actually, buyers tried to break to the upside 3 times and failed. So, what's after a push? That's right, an exhaustion. So here we see a push breaking to the upside. We may be seeing the beginning of a higher time frame exhaustion to retest what was its former downtrend. So to really simplify, price made a push to its upper monthly zone, tried to break to the upside 3 times. Sellers now have higher time frame control, and we may be seeing a higher time frame exhaustion. That's the simplicity, and that's what the monthly is telling us. Let's take it to the weekly. All right, on to the weekly. What's the first thing we do every time we take it down in time frame? That's right, we look to identify weekly area of sensitivity. So here we see horizontal buy and sell pressure, meaning we can identify our weekly zones. And now what's next? We have to talk flow. Okay, so here, as we saw on the monthly, is buyers trying to break to the upside and failing 3 times. When we take it down to the weekly, we can actually see they failed 4 times. Now, price made an important move when it broke its weekly zone to the downside. This means that buyers are likely exhausted and they're not going to have enough energy to try to break this monthly upper zone to the upside. Over a period of time, prices failed to break this weekly upper to the downside. So all this is telling me is that maybe, just maybe, this is the beginning of that higher time frame exhaustion. All right, on to the daily. We identify zones. That's right, we see horizontal buy pressure, so we identify our daily mid-range zone. Okay, so here's our upper weekly, here's our lower weekly, and remember, for the first time in a while, price is now trading below its weekly upper zone. Now we're on the daily time frame. This is still a relatively higher time frame, and price has been trading below this weekly upper zone for enough time to tell me that this isn't a stop hunt to the upside, meaning that sellers are keeping price to the downside, and again, we're looking for an entry short for that higher time frame exhaustion. Okay, so let's simplify price action here on the weekly. We see a break to the downside. As mentioned, price is trading below. Now we are in a consolidation period. What's a consolidation period? It means sellers are protecting their upper, buyers are protecting their lower, meaning when we see a break to either direction, we know who has control. That's who has majority of the strength. All right, so we see buyers try to break to the upside not once, twice, but actually 3 times. This tells me that they're not going to break to the upside anytime soon. They're too exhausted. We're already seeing price action fatigue before even reaching its upper weekly. That's sellers entering the market early. Okay, down to the 4-hour, we identified our 4-hour mid-range zone. Now it's a little bit hard to see. I zoomed it out so you can see the sell pressure coming across. Okay, let's simplify. Price is in consolidation between our upper weekly and our daily mid-range. We know that. Another thing we know is that price tried to break to the upside 3 times. And what I do know is that every time price tries to break a zone, whether it's to the upside or to the downside, and fails, it loses energy. That's why we have push and exhaustion cycles. A push is when price breaks an area of sensitivity because it requires a lot of energy. And because that requires a lot of energy, we then always wait for exhaustions. That's why winners enter at completion of exhaustions and losers enter at a completion of a push. So what I'm trying to say is this: price is tired from trying to break to the upside. We see a push to the downside, we see an exhaustion, and we're starting to see sell pressure at our 4-hour mid-range zone. So maybe what we're seeing here is a good push, exhaustion, and continuational push to the downside. And again, we're seeing that sell pressure already. We see a strong pin bar off our 4-hour mid-range zone. All right, now let's talk entry. Remember, here's that push, exhaustion, potential continuational push to the downside. But what would make this entry valid? One thing and one thing only: double confirmation. Okay, here we see a strong exhaustion to the upside. Buyers are still trying to keep price within consolidation. Okay, but we do see the sell sensitivity we need. We will see an impulse move to the downside. Do we enter short on an impulse move? No, we don't, because it's an impulse move. This is just sell limit orders being entered. This is just take profits being reached. Price will have a reaction to that. It's the second wave of sell orders that gives us a confirmation. So we're waiting for price after the impulse move to come and retest its 4-hour mid-range zone. If we see the second wave of sell pressure, then we enter short. So this would be double confirmation, enter at price action confirmation. So this would be hopefully a bearish engulfing candle close at second touch, then we're going short. Now, what would make this trade invalid? Very simple. We know we're gonna get an impulse move to the downside off our 4-hour mid-range. Price will come back to retest. Now, if it fails to see the sell pressure it needs, it will break this 4-hour mid-range to the upside. And if price breaks this 4-hour mid-range to the upside, well, this entry becomes invalid and we look for a re-entry at our weekly upper zone.